Hello traders, this is Chris from AAAFx taking a look at the gold market. You can see gold markets continue to take a little bit of a beating. Not a huge surprise because you have to keep in mind there were a lot of traders who got involved all the way down here and rode it all the way up. And after seeing the action of the last several days, think about it. Would you want to sit through all of that? You probably were very excited at the open. But, we've dropped almost 10% since the very high. So why would you sit on a market that continues to offer this type of selling pressure when you could just take the ball and go home? And I think that's a lot of what you're seeing. 50-day EMA is coming into the picture, and we are starting to see an area that could be thought of as potential value, but we have central banks all week. We have the Federal Reserve on Wednesday. We have the Swiss National Bank, ECB, Bank of England, all on Thursday. And then there are a couple of smaller central banks out there. Off the top of my head, I want to say Brazil and Pakistan. I can't remember who now, but there's several interest rate decisions on tap, and that's going to throw bond markets around the world into a lot of volatility. So it does make a certain amount of sense that gold, if you get these types of gains, you have to start thinking about taking profit. And I think that's what we're seeing heading into the new year. Now, if we can take out the $2,000 level to the upside, I might be interested in putting on a small long position, with the key phrase here being small. Looking at the hourly chart, you can see that we are at least trying to stabilize a bit during the session. As we're closing into the Tuesday session, but I really wouldn't make too much of it yet. What I want to see is a little bit of a bounce and some follow through. Then I would consider buying gold.